Hey, we had a really strong jobs report today, and you would think this would be really good news. So why did investors sell and cause the markets to go down? Let's step back, take a look at what's going on, and try to make some sense of all this. So how did the markets do this week? Well, the Dow Jones Industrial Average closed almost flat, very slightly down for the week. The S&P 500 closed very slightly up for the week, up 0.52%. NASDAQ Composite up 2.19%. I like where this is going, and I'll explain why. And then if you look at ARK Innovation, up a whopping 12.47% for the week. Now, why do I say this is good? You've heard me in my previous videos talk about how coming out of bottoms, and actually in good markets in general, higher risk stocks should perform better. That makes sense, right? Higher the risk, the better upside performance when things are going up. And that's exactly what we're seeing here. So I like what I see, even though the markets dropped today. Now, why did the markets drop today? Well, payrolls increased by 528,000 when expectations were for 258,000. That's more than double what the expectation was. So that's a really hot jobs report. And why did the markets drop? Well, everybody's afraid that now the Fed's going to raise interest rates even more aggressively to try and stave off inflation. But aren't they making a big leap of faith here? Just because the jobs report was strong doesn't mean inflation's going to be strong. So what's going to happen that'll tell us that? Well, next week on Wednesday, the Consumer Price Index gets reported at 8:30 in the morning. And then on Thursday, we have the Producer Price Index report. So those two numbers will tell us how inflation is either heating up or subsiding or staying the same. But we're going to have to wait till then to see it. And what do the markets think about the Fed's inclination to raise interest rates after that hot jobs report today? Well, if you look at this, the Federal Reserve is currently at a 2.5% interest rate after raising 75 basis points or 0.75% last month. If you look at the Fed rate monitoring tool, what this is telling us is that last week there was a 96% probability that the Fed would raise interest rates 0.5%, or let's call it 0.25%. So there was a 96% probability that the Fed would raise interest rates 0.25% to 0.5%. And then there was a 4% probability that the Fed would raise interest rates 0.5% to 0.75%. So yesterday, those probabilities were slightly different. So after the report today, this really shifted. Now there's almost a 50-50 chance that the Fed will raise rates 0.5% or 0.75%. So now the market's thinking that the Fed's probably going to lead towards a higher interest rate hike when they finally meet. But what are commodity prices telling us? Well, I showed this same chart in a previous video, and what's happening here is a lot of these commodities have fallen even further since I last showed this chart. So oil's now down 32%. I think before it was down 25%. Gasoline, same thing. I think it was down 25% from its peak. Now it's down 34%. We've got heating oil down 45%. Gold has been coming back a little bit lately, so it's down 14%. It's actually up from where it was the last time I showed this table. Copper down 29%. Lumber down 68%. Wheat down 42%, and so on. So prices are still falling for commodities. And why is the fact that energy prices are dropping so much important? Well, when you manufacture things, it takes energy. So energy is really key to inflation. If energy prices are dropping and commodity prices are dropping, that kind of tells me that unless labor costs are going through the roof, inflation has got to start to moderate. So we'll have to wait till next week to see what happens. Looking at our proprietary metrics, I think the markets actually look pretty good here. So what are we looking at? Well, we calculate what we call an equity risk level. And when this risk level gets above 80%, certainly 80%, 75%, I start to worry. But definitely when I see it above 80%, it's time to get out of the way. Now, this metric doesn't moderate after the bottom very quickly. In fact, I think we bottomed out back here before the beginning of this table. You can see it stays stubbornly high here. And finally started to fall recently. But what I like is that it's now falling. In fact, it's at a very low level here, 64. 67, 71, and 74 recently. This is really good news. So I like what I see here. This is telling me the markets are becoming more and more healthy. And what do our other proprietary metrics tell us? Well, if you've seen our previous videos, we're looking at buying and selling pressure here. The black line is the price of the Dow Jones Industrial Average ETF, DIA, and then this orange line is selling pressure, and the gray line, solid line, is buying pressure. Now you can see, and we've talked about this before, you can see that while the Dow Jones Industrial Average was rallying here, the selling pressure was stubbornly above the buying pressure. And that's actually a good thing. Why is that a good thing? That tells me that while the markets are rallying, investors are selling their safer equity assets like the Dow Jones Industrial Average. So why do I think this is good? Well, coming out of the bottom of a market where investors previously were putting their money in what they considered safe equities, like the Dow Industrial type equities, they start selling those equities and moving them into riskier assets. And that's exactly what you're seeing here. So the general trend of the market is higher. People are moving money from cash and putting it back into equities, but they're also not doing that as much with the Dow type stocks as they are with the NASDAQ or the innovation type stocks. And you'll see that in the next graphs that I'm going to show you. Now, before we move on to that, though, let's look at our price metrics here. These are proprietary price metrics. And if you've watched our previous videos, when this blue line is heading higher, that's good. When this purple line, which is the price slope, is heading higher, and in fact, when it's above zero, this line right here, that's really good. And when this risk slope is moving lower, that's good. So you can see this is all good here. These lines are all moving up. The risk slope is moving down. This is really a good look for the markets. And what about the stochastics? Well, when this blue line, the %K, is above the %Ds here, and we've calculated %D a couple of different ways here, this is good. And in fact, it's moving higher, and these peaks keep getting higher and higher. This is a really good look. This doesn't look like a market that's in trouble as of today anyway. So let's look at the S&P 500. Now the S&P 500 is a little riskier, even though it's more diversified, than the Dow Jones Industrial Average. But you can see here that way back here, the selling pressure was above the buying pressure. But more recently, the buying pressure has moved above the selling pressure, even though they crossed today. And again, how do these other metrics look? Well, the price metrics look great. The proprietary price metrics look really good. The blue line's moving higher. It's well above zero. The price slope has moved up consistently. It's above zero. And the risk slope is moving lower. This is great. Stochastics, %K above the %Ds, looking great. I see nothing to worry about here yet. What about the NASDAQ 100? Now we're becoming more risky. Now remember, with the Dow, the selling pressure was well above the buying pressure all through back here. But you see that's not the case with the NASDAQ 100. Why? Because investors are taking their money out of the safer equities and putting them into the riskier equities. So you see that here with the buying pressure being above the selling pressure off and on throughout here. And now it's been persistently above the selling pressure, even though they look like they might cross here. Now on our proprietary pricing metrics, again, same look. Price slope going up very nicely, well above zero here, which is where you'd like it. This blue line, the opportunity indicator, moving higher. Love that. And the risk slope moving lower. Great picture. Nothing to worry about here. And the stochastics, same thing. %K well above %Ds and moving higher. This looks really good. Now, how does ARK Innovation look? Well, remember, the riskier stocks are going to be hotter coming out of the bottom, and that's in fact what we're seeing here. You can see even way back here, the buying pressure well above the selling pressure, some back and forth here, but the price has continued to rally very, very nicely. This is a great look. And if we look at our proprietary pricing metrics, you can see this blue line started to go up here, way back here, right when this bottomed, it started moving higher. And even though this struggled a bit coming out of the bottom, this blue line has continued to move higher and is above zero here. The price slope moving higher, now above zero, and the risk slope moving lower. This is great. Stochastics, same thing, look really good here. So I don't see a lot to worry about in this market, but we'll have to wait and see how next week turns out. Now, what are the interest rate markets telling us about inflation? Well, we've had a really nice rally here in the intermediate duration treasuries. Now you can see that the buying pressure was well above the selling pressure back here. Again, the buying pressure above the selling pressure here. And we've had a fall off here the last couple of days. So we'll have to see how this plays out. But in general, this tells me that interest rates have been falling, not going up, at least at the long end, where the Fed doesn't control it. What about gold? Well, lately, gold's been trying to rally. You can see the selling pressure was way above the buying pressure back here. But then gold bottomed out here, started going up, and you can see the buying pressure moved up very nicely here, well above the selling pressure, and it continues to stay above the selling pressure. So we'll have to see how this plays out. And what's going on in the cryptocurrency markets? Well, they've had a very tentative rally here going on for quite some time. You can see the buying pressure above the selling pressure here, well above here, and again above here, but now they've crossed again. How do they look from the pricing metrics? Well, the pricing metrics look good. Blue line moving higher, the opportunity indicator. The risk slope is moving lower. That's what you want to see. And the price slope is moving higher, although it has a ways to go before it crosses zero. It's still well under zero. Well, there was also a fairly big drop here, so I'm not surprised. But we'll see how that plays out. What I don't like here is the way the stochastics are looking. The percent K went above percent D here, went below, went above, moved down again, now is above, but this peak is lower than this one, and it's moving down here and flirting with the percent Ds again. So we're going to need to see some rally here to see these improve. Look, just because the markets got spooked today by a hot jobs report doesn't mean you should go out next week and sell all your equity holdings. We'll have to wait until next week to see how the CPI and PPI numbers come out Wednesday and Thursday. But if I were to hazard a guess, I would say they will start to show moderation instead of inflation that's heating up. I'm Calvin Rose, and thank you for watching today. If you like this video, please hit the like, subscribe, and notification bell so you won't miss another upcoming episode of Invest Smarter. That's all for now. Hey, thank you for watching. If you enjoy these videos, there's several ways on Patreon for you to support the channel and access exclusive content, including special posts on the markets, educational materials about how to select investments and manage your portfolio. And at the investor level, you'll have full access to our natural selection stock rankings so you can evaluate individual stocks or market sectors that fit your investment style. Check out the link at the pinned comments below, and thank you for your support.